You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody, that music can mean only one thing. It is Interview Tuesday here on the Options Insider Radio Network, the day of the week where we welcome on guests from throughout the world of options and derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. My name, as the man said, is Mark Longo from the optionsinsider.com, as well as, of course, from the aforementioned network. Remember, if you like what you hear, it's more important than ever in these troubled times for you guys to go out there on your platform of choice, whatever it is, Apple Podcasts, Google Podcasts, Stitcher, Spotify, the app stores where you get our mobile app, wherever you get this show, and leave those reviews so other folks can continue to discover it in these troubled times. We've been doing this for a long time, and we love to see an influx of new listeners. And again, more important than ever these days to give those folks a reliable, a sane source of content. So keep those reviews coming. Keep those questions and comments coming, too. We do love to hear from you guys, just not in those review stores. Those take a long time to cycle. You can find us on most of the major social media platforms or our website to get at us in a much more timely fashion. And let's see who's getting at us today on the old Options Insider Radio hot seat. Joining us, an old friend of the network, even though I don't believe he's been on this program before. He is the once and future Dr. VIX himself, a.k.a. the Director of Research over there at EQ Derivatives, a.k.a. the Professor Extraordinaire over there at Loyola University, Mr. Russell Rhoads himself. Mr. Rhoads, welcome to the Options Insider Radio program.
I am absolutely, I've written several books, but I think this may be the fifth Option Insider show I've been on. Not 5 appearances, but 5 different shows. It
might be. I know you've been on TWIFO, you've been on the Option Block, you were on Volatility Views for quite some time. So this is at least 4. Maybe there's a 5th one lurking in there. I'm not familiar with.
Coffee with Cod.
Oh, that's right. You were on some of the other ones that I don't appear on, which are always fun to me.
And then finally, next week, I'm going to be on one for the first time. The Option Block, right?
Yes.
Right?
Yes.
I love asking you questions and catching you off guard.
Yes. See, I'm not the scheduling major domo here, listeners. I'm just the pretty radio voice. They point at the microphone. Other people make it all move smoothly behind the scenes. But yeah, you're right. It has been quite a few appearances. It's also been quite a few tilts at the windmill for you there on the author side of the space there, sir. You writing quite a few books. You know, it's funny. Every time everyone comes on the network with a new financial-oriented tome, they always tell me, this is it. This is the last time. I'm never doing this again. They always get sucked back into the well. You've been sucked into the well, by my count, Mr. Once and Future Dr. VIX, 6 times. Let's run through the list, and you can let us know and let our listeners know if we're missing any. First, of course, we have Candlestick Charting for Dummies. I didn't even know you did a For Dummies book, yet there it is over there in the very famous / infamous For Dummies series. Then we have Trading VIX Derivatives, Trading and Hedging Strategies Using VIX Futures, Options, and Exchange-Traded Notes. We have to update that title now. Not many ETNs left in the VIX space out there. Then we have Trading Weekly Options, Pricing Characteristics, and Short-Term Trading Strategies. Then we have Option Spread Trading, a comprehensive guide to strategies and tactics. Then we have one that's lurking around here in the studio. I just saw it recently. Option Strategies for Advisors and Institutions. And the reason, of course, you're joining us here today, the forthcoming VIX Trader's Handbook, the history, patterns, and strategies every volatility trader needs to know. That's quite a mouthful. It's quite a few epic tomes you have released, sir. Is that all of them? Did we miss any?
No, you missed one. I did the study guide that goes along with the Warren Buffett Way. Goodness, golly, 7 years ago.
Amazon doesn't even have that listed for you, sir.
So, well, that's kind of a half because, I'm just creating a study guide around that one. But my next book is going to be Warren Buffett oriented, but I'm not giving away the idea yet because I a couple of times I've stated book ideas publicly and somebody else has written them. So I've got to learn to keep my mouth shut.
Well, this is just you and I talking here. Nobody else listening.
Okay.
So feel free to give away all of your deepest, darkest, most personal secrets, and we'll see if we can keep them to ourselves. But you went back to the well that everyone says they're not going to go to, Mr. Rhoads, which is you wrote another book. So first off, why the heck did you decide to do that, sir? What brought you back to the dark side of writing yet another financial tome out there, even though everyone, like I said, who does it says everyone's going to be their last? And then B, obviously, the volatility trading space kind of crowded out there. What sets this book apart from all the other legion of financial trading tomes out there, sir?
Well, there's not a whole lot of very VIX-specific books out there. That's one of the reasons that, there's some that incorporate it, and then they're like little self-published ones that tell you, I've got a plan where you can make a ton of money trading VIX-related products, and basically it's a short VXX strategy. But it had been 10 years since I'd written the last one. People would even ask me if I was going to write another one, and this one took about a year longer than it was supposed to, and just about when we had it done, I had it done in mid-March of this year.
Did something happen in March that would change the volatility landscape?
We decided to backtrack a little bit and let that play out. And so then I continued to work on it through June 30th. And that's kind of was the final cutoff with respect to this book. And one of the reasons that was important is the last third of this book is basically a history of the volatility events, and how VIX behaved and maybe how it was behaving up front, and some cases where people did really nice trades leading up to it, and how the market, how long did it take us to adjust back to normalcy. So about a third of the book is the history of volatility events. And then the other reason you asked me, well, why would I go back to the well on this? I have learned a lot in the decade or so since I wrote the first book. I'll be the first person in the world to admit that. And I think this one, it's not an update. It really is just a complete new approach to talking about VIX compared to where we were when I wrote the first one. When I wrote the first one, there were two ETNs. It was the original VXX and the VXZ. And in fact, that one got delayed because it was like the day before it was due. The last chapter I was working on was the ETN chapter, and we got our first reverse split in VXX. And I had to go back and update the whole and update that whole chapter around that.
So what you're saying is you have excellent timing, sir. That's what you're saying.
I was in the VIX pit talking to somebody, and I looked up, and I saw VXX quoted at 44, and it had been like 12 the day before, and I'm like, oh my God, I said much worse things, but I can't repeat those here. I said, and are you, and then a word, kidding me? So
I guess what you need to do is let us all know about a few months before your book's about to go to press and get ready for publication, and then all of our listeners can come in and just pretty much sounds like load up on upside on the vol space, because clearly the impending release of your books just presages a huge tumult in the volatility space, sir.
Well, it's 2 for 2 so far. I don't know what's going to – actually, I'm going to do something that's a little bit more mainstream. I'm going to do – honestly, the next book is going to be the money book. It's going to be one that I write to make money off of. The other ones I've written because it's the areas that I'm interested in. And Like you said, most people say that they're never going to write a book again, and part of it's because you don't have these wonderful royalty streams rolling in. And in fact, if it were not for having written a dummies book, I think the wage that I would get for writing books is around minimum wage, or not much more than that $15 an hour that the Bernie Bros want us to get.
The big money in the dummies books these days. But, you mentioned it. Let's get into it a little bit. The somewhat ironic notion that you were in the process of releasing a VIX history book during what could be argued is one of the greatest events in the history of volatility and the history of VIX. How did you and your publishers decide, where do you draw that line in the sand now? Because obviously the book has to come out at some point, but this event is still playing out in front of our eyes. In fact, we have yet another big event coming up in a couple of weeks here with the election. Volatility is pricing in a lot of tumult there. So how did you react to that, A? And then B, how did you guys decide where to finally draw the line and say we have to cut off this history-making event here?
I really just, it was a back and forth between me and the publisher, and I looked at about how long it normally took these things to start to calm down. Needless to say, it has taken longer with this last one than many of the other ones, but I said, why don't we shoot for the middle of the summer? Maybe we'll get some summer doldrums, which we sort of did, and wrap this thing up and get it out. And if there's any, if there's anything to say about the election, I'll probably just put it out, on the EQ Derivatives site for free at this point. That was another thing. I started with EQ Derivatives right as I was supposed to be finishing this book in mid-March, and that was another reason to go ahead and push it out a little bit.
Well, we're glad you actually got it out, and you're right. Just talking about how since you first started writing volatility books, how much that landscape has changed. When you first started writing about volatility, it wasn't really a household word. Things like VIX and certainly the fear index, they weren't known by your proverbial grandmother from Iowa. They were very insular, mostly professional. If you didn't trade SPX and have a reason to lay off your vol risk from that pit, you probably had never really heard of VIX or S&P volatility. Those things weren't really common household terms. And yet now VIX, of course, quoted everywhere. You see it on CNBC, all these different outlets, Bloomberg, all the time. It's just kind of part of the vernacular now with S&P and Dow and everything else that is quoted out there. And of course, as you mentioned, the product landscape has exploded and now imploded as well, as we've seen a lot of interesting products come, and then in more recent history, a lot of them go. So how challenging has that been for the person who's out there effectively chronicling the VIX age, sir? How challenging has it been for you to keep up with just all the ebbs and flows in the space over the last decade or so?
Well, and one of the more difficult things is not necessarily when something goes away, it's real easy. It went away. That change in strategy for SVXY was one of the more difficult things that I had to adjust to. And that also, I have been working on this book a lot longer than I'll admit. That actually happened when I was, making my way through some of the earlier parts of the book. And what I actually did was I took the index that that SVXY follows, and I just adjusted it for a 50% exposure to show what it would have done in its current format. And beyond just, VIX, one of the other things is I was really hoping that we would see spikes take off, and I do talk about spikes in the book. I also was really hoping to see a relaunch of RVX, and we do have the VolQ futures now, but I was really hoping we would see the VolQ options by mid-year, and that's another reason I was holding off. Is I was really thinking that we would get a couple of more product launches before I finally had to give in and put the book out.
Yeah, it's a bit of a moving goalpost. You're never really done. Of course, we mentioned some have come off the table. New ones are on the horizon or in the prospect of launching. VolQ just launched on the future side at least a week or so ago. And then, of course, we have all these new ETPs threatening to come on the space at any moment and replace some of the ones that have gone away. Speaking of the products that have gone away, we got someone listening live here, Think Aloud. He wants to know, Mr. Rhodes, if you have a big chapter on XIV in your book, sir. So do you?
No, there's not a big chapter on XIV. I do talk about what led to the demise of XIV in the history part, But no, I didn't and I kind of danced around that one, to be completely honest. Just because you never know if somebody's going to show up with a subpoena when you're talking about things like that.
It's always fun to be threatened with legal action out there in the volatility space. But you kind of mentioned, the subtitle for the book is, of course, the history. We touched on that. But you also mentioned the patterns and the strategies that every volatility trader needs to know. I'm assuming some of those patterns have to do with the seasonal nature of volatility. And obviously, I don't want you to give away the whole kit and caboodle. People have to go on Amazon and pre-order the book. It comes out on October 27th. If you need a little bit of convincing, you may see a little blurb on there on Amazon from yours truly, help to twist your arm into purchasing said book. But give us a little bit of taste. What are some of the patterns and or strategies that every vol trader needs to know, sir?
I spent a lot of time talking about consistent short strategies, which are very popular within the, pretty popular with the professionals and with retail traders as well, as long as they get a pretty good handle on it. I also talk about cross-trading V stocks versus VIX, and which, something else. I knew I was forgetting a new product. Something else that has come out since I wrote the book that really lends itself toward V stocks versus VIX trading is the VIX minis, because taking the currency part out, the VIX mini is a $100 multiplier, and the V stocks future is a €100 multiplier. So they're just about a 1-to-1 relationship now. But and when there have been volatility events, which is what I call the history stuff, when we have volatility events that have impacted Europe directly, such as Brexit, I throw what happened with the VSTOXX futures in there as well and show how you could have traded VIX versus the VSTOXX. And then I ran through a couple of, there are spread trades that you see pop up in front of like the employment number, in front of, a Fed day where maybe there's some uncertainty. I guess there's not really uncertainty around those these days, but certain types of spreads that don't lose a lot of value, but might do okay if we do get the volatility spike. So I do talk about how people tend to approach that one as well. Those are a lot more difficult because unless you hit them exactly right, you're not going to benefit too much. So I actually concentrate more on being set up for a rally, but not getting too hurt if you don't get the rally that you're hoping for.
Well, there's a lot people are hoping for, perhaps dreading, on the horizon coming up here, sir, with a little thing called the election. It seems like it's been looming on the horizon forever, but now it is actually upon us. It is within a month here on our trading screens, which is crazy to say in and of itself. Obviously, you drew the line in the sand for your book before we can get through the election, because obviously you wanted to put it out sometime this year. But there's a lot popping off on the vol space out there as well, in terms of the VIX futures term structure, in terms of the ETPs, and everything else going on out there in the swirling maelstrom of premium, even though it's a little bit less now than it was a week or so ago, but still a lot of juice being built in around this election, sir. What is really catching your eye out there as you're looking forward in the next couple of weeks in terms of the volatility surface and everything else that's just driven up by all this election premium, sir? Well,
right now, we had that unusual situation where October was much higher than November, and the day that October became the front month, it flipped. But looking this morning, and I haven't checked quotes for a couple hours, but this morning, the October contract that's got a week left to go is only at a 70-cent premium relative to spot VIX. So, I think that any October surprise, people are thinking that we're not going to see one of those, and that we're going to sit around and wait until election day. The 2-point premium that you have from November, and if you look at the money implied vol on the SPX options that expired just after the election, I think more and more the market is starting to buy into Biden's going to win this thing. Biden's going to trounce him, and there's not even going to be a justification to say I'm contesting this election. And if you look at the Real Clear Politics poll, where you can break down the electoral part without any toss-ups, just saying who's in the lead right now, I think Biden has him 375 to 180, whereas the day before the last election, Hillary only had him beat by 4 electoral votes. This thing is not nearly as close as the press makes us think it is, and I do believe that's starting to show up in the market as well.
That certainly can be said, looking at how they've really come after that election premium. Just in the last week to 10 days or so, it really seemed that they've come for it pretty aggressively. So it does seem like someone or many people out there are pricing in perhaps a little bit more of a known quantity post-election. You go back about a month or so, and you saw people pricing in extreme levels of volatility all the way through January and beyond, which perhaps gave a little bit of a dark picture for the future of our political system in our country. But looks like a little bit of maybe saner heads are prevailing in terms of just understanding and pricing in some sort of known outcome after the election, which it seemed like for a while that people weren't even pricing that into the picture. I have a lot more questions for you, sir, but it seems like we're being hijacked. The listeners want to get at you as well, so let's get a couple of them on here. First off, some guy I'm not familiar with. I think they call him the Flow Master in certain parts, a.k.a. Mr. Henry Schwartz, formerly of Trade Alert, now part of the ever-expanding SIBO empire. He says, "Hi, guys. Russell, I can't wait to buy your newest edition. Question, I heard a trader on a recent podcast talking about a strategy shorting both levered long and levered short ETFs, vol and otherwise, at the same time to capture the underperformance of each when held long-term. Do you think this makes sense?" So what do you have to hear for Mr. Flow Master, sir?
That does make sense. That and Mr. Bittman, who I used to work with over at SIBO, was a big fan of trying to take advantage of how those things are set up to give you single day moves as opposed to match the long term performance of one of the indexes. It's really only supposed to match the daily performance. I think the only big fear with respect to that is if you get a really strong trending market in one direction or another, you can get run over pretty badly. But in a choppy market, it seems to me those types of approaches always have made a lot of sense. I think another negative behind that is my understanding is sometimes it's very difficult to borrow some of those things. So maybe you actually need to look to the option market on them to express a long or a short position.
Well said, Mr. Flowmaster. I do believe you have a little bit more pontificating on the election in store for us, sir.
The one thought that I had when it's one of those things where you have a thought and you wish you had said it. It's very possible that the concern that the market was having around the election, I think everybody, if you're a big Joe Biden fan, everybody was afraid he was going to blow one of the debates. And now that it looks like there's not going to be any more debates, maybe that's why things have calmed down so much market-wise.
Yeah, that's certainly a lot to unpack into why this election premium seems to be eroding. Not quite gone yet, but nowhere near at the levels it was even a week, like I said, or about 10 days ago. So we have more listeners chiming in. We have, I like this handle, Made in St. Gracie. I'm not sure where that is, but it sounds like a wonderful place. Very, very polite listeners, too, today. Hello. I have a question for Mr. Rhodes. If VIX ETNs/Fs closing prices are not affected by supply and demand, but rather by the VIX board. Oh, the VIX board. Uh-oh. We getting tinfoil hatty here? What drives intraday prices in these instruments? Thanks in advance. So I'm not sure really what they mean by the VIX board, Mr. Rhodes, but if you want to take a stab at it, have at it.
Sure. I think we're probably going with that one, and I'm going to use a spider versus the S&P 500 example. If you actually look at the SPY closing each day relative to its NAV, there's always a small disconnect between the two. But throughout the trading day, what the S&P 500 is doing is keeping the spider ETF within a range of where it should be based on what the 500 stocks are doing. I think the VIX ETNs do the exact same thing, because I know that, and I'm thinking of one trader in particular who would come over to my house and punch me in the nose if I shared who they are, but I do know somebody that pretty consistently trades VIX futures versus a couple of the VIX ETNs when they get out of line with each other, because they do, there is somewhat of a fair value relationship between the VIX futures and the ETNs, but it can disconnect. And part of the reason it can disconnect, maybe even more than with the S&P 500 and those ETFs, is it's a little bit more difficult to arb the two versus each other. And then also, when you do that with the SPY ETF, if you're a professional, you actually have the ability to buy the ETF and go, I want the stocks, and receive the stocks and cover shorts that way. So, and so the short answer after going through all of that is that the VIX futures prices are driving what's going on in those ETNs, along with just the supply and demand, or the buying and selling of those ETNs as well. But if they get too far out of line, there are arb traders that'll come in there and buy them if they're too low or sell them if they're too high. And then again, at the end of the day, there usually is somewhat of a disconnect between what they should really be priced at and what they are priced at.
Speaking of the VIX ETNs and indeed the entire universe of VIX ETPs, we have seen some ebb and flow in that space, mostly ebb of late, but maybe some new ones on the horizon. Of course, we saw a lot of the more infamous ETNs like TVIX and others go the way of the dodo very recently, but we have heard rumors for a while of an influx of new products coming in. Let's say perhaps a successor to the infamous XIV in SVIX and a few others. I know you have your fingers in many different volatility pies out there, Mr. Rhodes. Have you heard any updates on the status of those? And if so, maybe a upcoming chapter in a new VIX book, or are those perhaps a whole other VIX tome on the horizon for you, sir?
When those come out, I will be all over, and probably not putting it in the book. And I say when because I personally have a belief that we're going to get a new short volatility and a new leverage 2 times long volatility ETP sometime in the near future. I don't know where they are in that whole, you put something in front of the SEC, then you're kind of on the clock for the SEC to approve or ask for more information. I don't know it. I don't know what's going on to that point, but I do know, and I do believe that we're going to see a couple of new ones that are going to mirror some of the more popular strategies and have some tweaks that make them a little bit less worrisome than what has happened in the past as far as how they're being managed. I think they're going to be ETFs as well. And you got to keep in mind when you're buying an ETN, somebody's promising you some sort of performance, but that doesn't mean they're holding the underlying securities. And with respect to an ETF structure, they got to hold the underlying securities. So I think, and when I was with SIBO and I really had to be as neutral as possible, I would say in passing, the ETF is not at, there's a counterparty risk that shows up in the ETNs that doesn't show up in the ETFs. And all else being the same, I would prefer to buy an ETF versus an ETN, just because if we get a volatility event that takes a financial firm down and the financial firm happens to be backing a volatility-related ETN, it's very possible that ETN could lose a lot of value as well, just because there are concerns on the backer being able to make good on that obligation, just like a bond and a company going bankrupt. So I've always been more comfortable with the ETF structure. I have a funny feeling that any new ETPs that we get will have that ETF structure, because I like to believe that the good folks at the SEC kind of agree with my view on that one, that they would be more comfortable with an ETN or an ETF than an ETN structure.
Yeah, it definitely seems like we've all seen the failings and the weaknesses of ETNs in recent years, and certainly sounds like the regulators definitely favor one over the other these days. I'd be surprised if we see a rash of new volatility ETNs getting approved in the near future. Again, it's 2020, so nothing would surprise me too much at this point, but definitely seems like ETFs are the wave of the future, at least for now. All right, and unfortunately, that music means we've come to the end of our little sojourn. If you're listening live, stay tuned. We'll pump in some other fun stuff in the live stream. Keep you guys occupied and engaged on yet another active day out there in the marketplace. But before we go, Mr. Rhodes, hit us again about the VIX Traders Handbooks. If folks want to find it and pre-order it for themselves, where should they go? What should they do? Give them one final sales pitch, sir, to go out there and pre-order for themselves.
I'm the worst self-promoter in the world, but you can find it on Amazon, and it's actually available in the UK as well already. And I don't know if there's any difference between the versions. I should see if the Queen's English is in the other one or not.
One is festooned with U's next to the O's. That's about it.
And finally, I've already got a group that wants to translate it into Portuguese for the Brazil market. If you want to translate it into another language, let me know. I'll hook you up on that one.
Exploding Brazilian volatility market. Definitely has to be in French. There's a huge audience for VIX and all things institutional SPX vol in France. So definitely need a French version, sir. And maybe a Portuguese as well. And, of course, you kind of teased some of the other stuff you're working on. Leave us a little bit of hint, a little bit of a tease of what else we can expect from the once and someday in the near future, hopefully, Dr. VIX, sir.
What am I doing now? Well, I'm trying to finish my PhD so that you can only call me the now Dr. VIX. I'm writing up what's going on in the markets. I'm doing a series on different volatility spaces or different volatility markets leading up to the U.S. election. The next one's going to be on VIX. I already did one on V stocks. Then I'm going to take a look at VolQ or NASDAQ volatility as well. So that's where I'm at. I'm everything I put up on EQ Derivatives is in front of the paywall, and I always put it out there on the Twitter for people to read.
There you go. And speaking of reading, get on over there to Amazon and pre-order the VIX Traders Handbook. That's all you have to search for. If you want to search for his name and his other tomes, well, then you know how to find it. It's just RHOADS, Russell Rhodes out there. Mr. Rhodes, thanks for joining us. Thanks to all of you out there for joining us here on Interview Tuesday as well. You guys know a lot more content in store for you throughout the rest of the week. Education Wednesday coming up tomorrow. We've got Options Bootcamp, Options Playbook, Radio. So if you want to learn more, maybe just perfect some sort of strategies in your options trading, those are the shows for you. Of course, back on Thursday with episode 2 of the Option Block, as well as TWIFO, This Week in Futures Options. Friday, Volatility Views, and it all kicks off again on Monday with the Option Block and Crypto Rundown all the way through to another Interview Tuesday and another episode of Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.